This is 12th of December 2025, and I want to talk about the trade that I took today. Today, I made some good uh, progress today. You can see I made 1.7%. You can see that I sell, I take my profit earlier, but it's fine. Everything is within my plan, and I take profit as well. So, pretty similar trade idea here on gold and US 500, right? Let's talk about the trade that I took on gold first, right? I took two trade here on gold. One is you can see break even, and then another is a winning trade. And I took one winning trade on US 500. Let's talk about the trade that I took, right? When I came to the chart, I can see that at this point we're super bullish, right? You can see that we're in a tight bull channel, and then one pushes up, two pushes up, we're up 1,300 pip, right? Which is very buy climatic, right? You can see very climatic move. We're up. You can see we're up 12 um 12 13,000 point per, I would say 13,000 per in a day, right? Not in a day, in 2 day. So we're super climatic, but nonetheless, it's in a tight bullish channel. And what I want to do is buy, right? At the time when I saw a bullish candle, uh, first time bear are able to close below moving average, meaning that okay, the bull trend is getting weaker because the bear are able to sell below the average, are able to put price below the average price, but in such a strong tight bullish channel, the first time that the bear would do anything will probably fail, meaning that the first time it close below moving average, you probably will be bought and then at least retest the high rate. And then that's my idea. We're in a very tight bullish channel. And then when I saw this bullish bar right over here, and then what I want to do is I can see mine a wash top, a wash bottom as well. One, two, three. You can see that. One, two, three. Wash top, high, low, strong signal bar, close above moving average. Put my stop here, timing 1 to 2, risk reward ratio. That's my whole idea, right? You can see that price eventually can able to uh able to kind of like meet my target, but you can see that definitely the bull are getting weaker as we can notice that the bear are able to close below moving average for the first time, and then also we can see that we are kind of in a bad trading range. We have more trading range bar overlapping with each other, long wick, smaller body. You can see that, right? And then I exit my trade when I see potentially we here make a wedge top, and then I can sense that the strain of the ball are getting weaker, and then I just exit my trade at break even after I saw this bear bar. Probably we will retest the low. I do not want to risk that. I rather to close my trade at break even instead because a long way to the top, even though good follow through, but just reverse, and then I rather close everything at break even. Is it the right decision? I think, yeah, it's okay decision as I saw, price fail to continue pushing up. I'd rather to take a break-even trade than a loss when price hit my stop loss, right? And then you can see that price trend dramatically. I would say you can see that price make a kind of like a three pushes up, one, two, three, and then a bear back. In hindsight, I would say I can sell below this bear close as well because this is such a strong bear bar breaking below this bolt channel. But when I sell here, it's higher probability, but um less good risk reward, right? It's always a trade-off situation. I can say I can sell below this bar This is a one big bear bar. Probably price will continue pushing down for 1-to-1 ratio, and then a sell below that bar. Also the same idea. We're in a strong bear trend, and probably price can continue pushing down for 1-to-1 ratio. That's my whole idea, right? And then I secure my trade, secure my win. Very easy trade idea, I would say. The thing that I can bet I probably can sell below here, but I think it's still fine. I sell below here for high probability as it closed below this low, close below the low of the last I don't know how many bar, and I probably will be strong enough to have a second neck down. Here is my I put my stop here, right? And then 1-to-1 visual ratio. That's my whole trade idea on a US 500. In the C is probably the same idea. You can see that here, market open, and then when I saw 1, 2 here, I'm thinking that probably we will have a wash bottom, and I want to buy because 1, 2, 3, and then probably we will have 50% chance reversal or 80% chance of minor reversal or something like that. Um, and that um when I saw this bar fill close, when I saw this three consecutive bear bar, probably I'm thinking, okay, probably we will not reverse, and then the next bar close like a reversal bear bar, reversal sell signal, I say reversal sell signal, and then I just sell below the low of a bear bar. In general, it would be better to sell below the low of a bear bar, and then three consecutive bear bar with bigger and bigger body, close on the low, probably with a second leg down, and then I the same idea on go. I put my stop here, put my enter here, tightening 1-to-1 ratio, and then you can see the price reach 1-to-2 ratio, and then stall out here as well. So that's my whole idea. Very easy trade. This is like at least 60% chance that it will continue pushing down here, and that will, have a positive um expectancy, and able to make money in the long run, right? What I want to say is my funding perp here, because I'm 100% I can keep all my profit. I'm up already $307, right? I will going to keep trading this account to the end of my payout day. Um, then right now I'm also running 25K phase one account. I would say right now I'm up 2%, 2 point something percent today. Yeah, today is a good trading day for me, and everything makes sense. I would say this buy here makes sense. Exit at break even to protect myself. This bear buy I can sell earlier, but it's still fine. Sell this closed, expecting 1-to-1 risk reward ratio move, and then the same idea on just 500. So I make no, it's roughly 200 today, and also it's good amount of money if I can make it consistently, right? It's not about making a quick profit. It's about consistency. It's about whether can I master the skill. But I think technical analysis is really not a big part of the deal. I think more important is about the mindset, right? Whether can I be able to battle myself, to resist all those temptation, really to really battle with myself, and then do not take those trade that is not fit in with my trading strategy. Just do not be emotional attached to the money, to the profit that much, because it will affect my trading. Because okay, probably I will lose that amount of money, then I will trade differently. So I think more important is about the psychologically, or it's more about like the mental part, I would say, for me. So yeah, peace out. Hopefully I can use prop firm trading as a leverage to really master myself, and trading is I would say it's a way, or it's a path for me to understand myself, to battle myself, to really give me something to work on, and I really enjoy trading as well. So hopefully when I watch back this video 1 years later, 2 years later, 3 years later, I can be where I want to be, right? I will not say 1 years later, but I would say at least 3 years later, I can be a full-time trader. And then I will not say I want to make big money. Of course, everybody do want to make big money, but at least for me, I want that financial freedom. Even though if I can pull out like 2K, 3K a month, I would be grateful. I can do my own stuff. I can live in, I don't know, like maybe in Southeast Asia, in some, lower cost country. But it is what it is. I mean, like I'm just ranting here, but I'm gonna call it a day, and it's a good performance for me today. Peace.